Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Lynn & Associates with your morning flash update for this Tuesday, the 25th of July, 2017, about 9:25 a.m. Central Daylight Time. Interesting day. My eye goes right to the copper market of all the markets, and that's because Chinese data came out super strong last night. So there were fears this market because of the tightening going on, the stopping of fleeing of capital leaving the country, that they were going to, not tailspin, but see even a further reduction in their GDP and so on. It's really not what's going on. If you look at the rebar, what's going on. If you look at copper, what's going on in terms of imports, what they're doing, this has surprised the market, and you jump today to a 4-month high in this copper market, taking the market literally by storm. That's the only word I know with it. In the U.S., if you read in the morning papers right now, you're going to read that Secretary of State Tillerson, there's word, he says, some friends are quoted saying he thinks he'll be lucky to last through the end of the year. McMaster unhappy. Everybody's supposedly unhappy. They're not getting their choices into offices that they want under them, obviously, and that is a problem. Do you see it in the stock market? I don't know. You know, these are new highs we keep making. And yes, the NASDAQ down a fraction. Okay, so Alphabet got hit with Google. So what? Market's still good, and you can see how it's all working out there. In the metal markets, while the gold's down $2, so what? It's a bit of profit taking, and that's all that it really is. You still have the dollar falling. You've got the euro soaring, 117.5. If you didn't go to Europe on time this summer, you got a problem because it's really moved up about 6-7 cents on you. British pound defies gravity, continuing up. And the bonds and the notes, well, there's a sell-off. We have a 2-day FOMC meeting that kicks off today. Whatever the Fed comes out of there, they're not expected to be super dovish, so the market's responding to that in a negative manner. And in the grain markets, I had written to my clients last night about the crop conditions, and I said, I got my doubts that even that will be able to hold the rally, and so far that seems to be the case. Now, you're rallying fairly smartly up here in the crude, and I'm wondering where the pros are going to step in for their hedging. The guess is, from everything I'm reading, about the 4,800 area, so roughly from today's highs, another 45 to 50 cents higher, you could be into a resistance zone up there, so I'd pay attention to that one way or the other. The nat gas lost its way on the uptrend, and if you're watching the meat markets, there's not a lot of follow-through today to the cattle where you close the limit down in both the fat and the feeder cattle. So be careful there. The market may have sold itself off for this leg of that break. You know, those are just the things that we're watching. When you take a look at the data today, the conference board comes out, the index 121, they expected 116. We feel good about this market regardless of the politics. It's almost like a joke every day, the new politics that we get. It's sad, but I think we've got, right now, Teflon skin. We're getting so used to it. The conference board consumer expectations, 103.3. They had revised the last month to 99.6 from 106, so it's still a big jump. And your present situation index is 147.8 from a 143.9 that they revised down last time. For whatever reason, we feel better. When you go to the Richmond Fed, look at the numbers. 14 versus 7, 13 versus 13. I mean, you can just go through these. You're getting an improvement in most areas, not all. The retail revenues were down, up 24 versus an up 49. And you can see some of the areas of slippage, but overall a solid report. Case-Shiller Index, we always look not at the 10, but at the 20 metro home area, and it was up for May 5.7% from the year ago month. They expected up 6%, but you know, prices are very high right now and supply is limited. Metro home prices for May up 0.8% versus the prior month itself. Google and Alphabet took a hit. However, McDonald's, Caterpillar, there's just a host of companies doing very well. and taking the revenue guidance up a little bit. That's it. As I said, copper at a 4-month high. And the Bank of Japan, they have 2 new board members that are sitting there, policy members actually, and they pledged today that they are not going to want to exit the current program before the 2% inflation target is hit, and they're nowhere near that. So that put pressure on the yen today as you took a look at what the markets were doing. Now, this is the time of year, if you're a metals trader, you start watching gold. You entered right now, I can't be any clearer than I'm saying, the typical seasonal where gold tries to move to a more bullish stance. Doesn't mean it has to, by the way, but typically it does in years that are going to be friendly years to the upside from this point until, probably into the September timeframe. That's one of the trades. Then you get the cattle trades. Then you get the other seasonals that kick in. This is an important time between now and August where the market starts setting itself up for the fall months. What are those trades? What were they in the past? And remember, just because something worked in the past doesn't mean it'll work in the future. However, it is a tool, and as a tool, I look at it for what the futures might do, and what the more research does is they have a data bank that goes back and it looks at the probability of trades. You buy on a day, you get out on a day, they give you a write-up about it, and you take it. I'm the first to tell you, and they're probably the first, I'm the second. You don't use this without your other chart work. But when you go to their website, you're able to use interactive charts for bear years, for bull years, for neutral years. So which phrase do you think? Which one? And you can put them all on one chart too, and you get an idea that no matter what the situation, sometimes you get a bounce, sometimes you get a break in a market. How do you play with that, and how do you put it into your thinking? Well, if you'd like to learn more, it's really simple. They offer a 2-week trial. We can set you up on that right away. This is a service that I have used probably 3 decades, maybe 4. As long as I've known they've been around, I have been a regular, and they'll vouch for that. I've been with them for God knows how long. And it's a tool, and I learned how to use it, and I like it. So all you need to do to get your 2-week access to it, if you haven't tried it before, is give us a call at 866-973-2077. You can go on our website at www.iraepstein.com. You can click up here if you'd like to, if you're watching me on YouTube, and you'll see an icon. That'll bring you to the forum as well. Or under us on many websites, it says, click here for Ira's free information. Do so, and away you go. I'm Ira Epstein. Thanks for watching, and I'll see you this afternoon in the other video.